Hello everyone, my name is Khan and welcome to the new video. In this video, I'm going to teach you that exactly that how we can identify what is market going on and how we can identify reversal trade and continuation trade. This video is going to be very important for you while you're trading based on candle range theory. In this video, I will teach you exactly that if market momentum is a bullish, then how market look like in a lower time frame for the reversal. And same thing applicable in a bearish market if market momentum is a bearish, and then what kind of thing changes in a lower time frame to change momentum bullish to bearish and bearish to bullish. So this video you will get all clarity in one video, that which point you should buy for the continuation and which point we should buy for the reversal. Right now we can see here we have a two diagram is here. First one is here and second one is here. So let me show you exactly what is difference between both diagrams. Both diagrams look similar, but difference between only direction. First direction is showing here. We can see here first market was bearish and now turn into bullish. But in a second diagram, market was bullish and now turn into bearish. So these are two major difference between both diagram. Let me show you exactly how we can read the candlestick in a higher time frame, and this higher time frame candlestick can be your 4-hour and 1 day and weekly, any time frame can be used. In the first diagram, we can say here, if market momentum is a bearish, we know exactly that if market momentum is a bearish and creating strong bearish candlestick, so we are expecting some continuation in a downside because market momentum is a downside here. Same thing applicable here, market creating continuation pattern here and this is a continuation pattern here. Why? Because market is showing extreme downside move right here. And this is a, for example, is a 4-hour time frame candlestick. So we can use 1 minute or 2 minute for the continuation trend. And simple, we can get anti. As I told you, market should be taken out the inducement and liquidity push downside, take a pullback, and we can plan for the sell. So this process will be continued in a continuation trade. And what happened at this point when market take some reversal to the upside? At this point, we can see here, first we are thinking about the continuation. Why? Because we don't know that market can reverse at this point. Because market momentum is a bearish and we are expecting at this point that market can continue more downside. But at this point, what happened here? Something is going to be changed here in a lower time frame. So we can expect that market looking for the reversal, not for the continuation. So what kind of structure form in a lower time frame and how we can trade here? First, you need to understand here, when price create here, we are planning here for the continue in a downside. But at this point, what happened? Price going downside and downside. And we are expecting that if market taken out the investment, which one is here, and then we can plan for the sell. But that time what happened? Market not able to break the previous low is here and market just came back to the upside right here. It means market not able to push downside in a first attempt, market taken out the investment but not break the previous low. If market break the previous low and take a pullback, so we can sell, but market not able to go downside as per our plan and market again push higher. So in that case, how we can deal? In this case, simply we can plan for the buy here. But how we can buy? Simply we need one more confirmation here for the buy and sell, which is inducement and liquidity. So in this case, we can see a market going higher high, push downside, taking out the inducement, going higher high. So this highs are broken. It means the first one is an inducement for the continuation, but this one is a break by this one. It means this is a failed here. So we are planning here for the buy to the upside here. And this is our trend and liquidity, which is low is a grab here. This is an inducement. It means this entire zone act like an order flow. So we can plan here for the buy at this point right here. So this is an indication that how we can identify our reversal trade bearish to bullish here. And same process will be applicable here, bullish to bearish here. Let me show you exactly. In a second diagram, we can see here clearly that market momentum is a bullish. So if market momentum is a bullish, simply we can plan here for the continuation here. As we can see here, this is a candlestick here. If market create this type of candlestick, we are planning here for the buy to the upside. And this is a 4-hour time frame. So we can generally go in a 1 minute and 2 minute time frame for the anti confirmation and we can plan for the buy. Same thing applicable on top of the structure here. If market create like this one, so generally we are waiting for the continuation because we don't know exactly that market can reverse in a downside. We are expecting price can go higher and higher. As I told you in a starting at this point, that if market create this type of candlestick here and in a lower time frame structure will be changed, like for example market going higher high and higher high like this one in this case, right? So this is a bullish structure in a lower time frame as well as here, and we need lower time frame confirmation here for the sell. So how we can sell here? Firstly, if market taken out the low, we are planning here for the buy, but market not able to break the previous swing high and market just push downside and downside. It means there is no momentum for the buy, because when market create a continuation, then market will gives you very aggressive entry for the buy. If market taking some time, that means market looking for the reversal or maybe sometime create a indecisional candlestick. So if market create like this structure here, so how we can deal in this case? Simply market taken out the investment and market push downside, so we can plan for the sell. Why? Because this entire zone act like a shadow here, because buying and selling both are equal. That means this candlestick swing as a shadow here, and this is a body and market push downside right here. This is a shadow, this one, and this is the entire body which one create at this point right here. So we can anticipate like this structure here in a reversal and continuation, and these type of thing you need to understand before the buy and sell. And after that, what happened here? This one is a reversal trade right here. And after that, we are planning for continuation, again continuation here. And for example, what happened here? If market take this low is here. For example, market again take this low here, and you need to follow similar rule is here. And after that, if market create here any bullish structure here, so we can plan for the buy. And sometime what happened, market just taken out the previous candle high and low immediately. Like for example, what happened in this case? This low is here, and market again taken out the previous candle high is here, and again market following the previous structure as well as here for the continuation in a downside. So it means we can see here market taken out the liquidity both side here. So you need to prepare on a both side. Maybe market can continue to the upside and maybe market can push downside. If major trend is a bullish, right, and you are looking for the sell, that means that those sell can be for the short term, because major trend is a bullish. Let me show you on chart, then you can understand more better exactly what I'm trying to explain here. As you can see here in this case, market momentum is a bearish here, and this is a higher time frame structure here. Market momentum is a bearish. So in this case, you need to understand one thing is here, that if market create a bearish momentum and create any sell setup, that means you will get high probability entry for the sell. But if market create any buy side, so you will get entry for the buy side, but for the short term, not for the longer run. If you can see, start from the top of the structure to bottom of the structure, you will see many buy sell entry. But sell side entry will gives you more risk reward, more high probability. But in a buy side, you will get a 50% of the probability for the buy side. Let me show you exactly. If I start from top of the structure, we can see a previous high sweep, you will get entry exactly. Again, market sweep the previous high, you will get entry here. Again, what happened here? Previous high sweep, previous high sweep. When market sweep the previous high, that means you will get more high quality entry for the sell right here. You can see here how many times market create sweep here. 1, 2, 3, 4, 5, 6, 7, and again and again. You can see here how many times market sweep the previous candlestick here. If market sweep the previous candlestick, you will get high probability entry for the sell. But another side, when market sweep the previous low, which one is here, and you can see again here, and again here, right? So how many times market sweep the previous low is here, then you can see here how many times market create a small pullback here. There is no strong momentum to the upside right here. We can see here exactly. Look at this one. These candlesticks showing like previous low is a sweep here and sweep here. We can see here. If market sweep the previous low in a bearish market, then you will get a small pullback to the upside like this one right here. Okay. You can see here how many times market create a stop loss and break even in this case. I'm very sure that if you are looking here for the buy, then most of the time you must hit your stop loss. Okay. So I will suggest you, if possible, to avoid these type of thing. If market momentum is a bearish, then you have to focus on sell side entry. You will get more aggressive entry for the sell. And same thing applicable in a bullish market. Let me show you. In this case, we can see here that market momentum is extremely bullish here. So you can see here how many times market created strong bullish and bearish scenario here. Let me show you exactly from top of the structure and bottom of the structure. In this case, when market sweep the previous low, we can see here how many times market creates sweep the low is here. Again and again market sweep the low. When market sweep the low, then you will get high probability entry for the buy to the upside, and you will get very strong momentum to the upside. We can see here how many times market sweep the previous low is here, right? So if market sweep the previous low, you will get very good risk reward entry here for the buy to the upside. And if market sweep the previous high, you will get short term move to the downside right here. So you can see here how many times market create a previous low sweep here. If market sweep the previous low, you will get very good risk reward and you can catch every momentum. While another side is here, we can see here previous high sweep, you will get short term move, you will get short term move. Again, previous high sweep, you will get short term move right here. Again and again, you can see here sometimes market sweep the previous high, but you will get short term move in a downside. But in a lower time frame, you can get a very good risk reward. But I will tell you exactly what I'm trying to explain you here, that how you can find quality over quantity trade. When market sweep the previous high in a bullish trend, that means you will get sell side entry, but the probability is here 50-50%. Like for example, if market sweep here and if you are planning here for sell, you will get this type of setup here. Again sweep here, you will get this candle here. These type of situation you will get in a bullish trend and bearish trend everywhere. Look at the another one is here, previous low sweep and again buy here. So this is exactly what I'm trying to teach you, that how you can spot the high quality trade here for the buy and sell. First, you need to identify of the trend direction. Then you need to identify the previous candle high low sweep them. Then you can get reversal entry if market continue follow the trend. So you can get high probability entry for the buy. Like market momentum is a bullish here. So you can get these type of like reversal entry. But what about the continuation? You can see how many times market get continuation entry. These are very good entries while you trade in a lower time frame. You will get very aggressive entry for the buy and you can get immediately risk reward. Again and again, we can say how many times market create continuation entry. If you try to understand candle range theory, this video help you a lot to make it very easy to trade. Let me show you few example in a continuation trend and reversal trade. Let's see. In this case, we can see here that market momentum is a showing bearish and market falling in a downside right here. So if market momentum is a bearish, so generally what are you looking here? We are looking here for the sell. If market sweep the previous high, so we can plan for the sell. But if market sweep the low, so we can plan for the buy, but for the short term, right? So in this case, we can say how many times market create a buy and sell opportunity. If you start from top of the structure to bottom of the structure, we can say here that if market break the previous low, which one is here, and we can get an entry for the buy to the upside. Again, what happened here? Market push downside, again break the low, you will get short-term entry for the buy. Again sweep the previous high, we can get aggressive rally in a downside right here. Again market sweep the previous low, we can get short-term move to the upside. But this is a little bit good entry here for the buy. But in this case, you can get a good risk reward and good trade here because 3 continuation bullish candlestick form here. But these type of thing not happen every time. Again, what happened here? Previous low is a sweep here and we are expecting market can go higher. Maybe market at this point, market can continue go higher, right? So you have to prepare on both side right here. But overall direction showing bearish here. So if market create sell setup, so you can get high probability entry for the sell. We can go for the sell side. But for the short term, if market taken out the low, so we can get a entry for the buy. But this entry will be 50% of the probability. So in this case, the previous low sweep here and we are planning here for the buy to the upside, and this is a 4-hour time frame structure here. And let's see what happens next in a lower time frame. And remember one more thing is here, that if you are looking for the continuation trend, so simply you can use 1 minute and 2 minute time frame for the better confirmation. So this is a 4-hour time frame, and now I'm going to show you exactly what happened here in a 1 minute time frame and how we can identify them. So this is a previous 4-hour candle low is here, which is broken by this one, and this is a liquidity grab here. And again, what happened here? Market trying to go higher, and now again we are expecting that market can go higher and looking for the continuation to the upside. So let's see what happens next after this one and how price is reacting here. Simply, if market momentum is a bullish and looking for the continuation, we have to wait for it to take out the investment, either liquidity, so we can plan for the buy to the upside right here. And let's see what happens next after this one, and price going higher high and higher high. And when market taken out the investment, so we can plan for the buy to the upside. Look at this one, higher high candlestick formation here, and this is a trend line liquidity here, and this is a previous low which act like a investment right here, which is already grab here. So if market broke it, so we can plan for the buy to the upside. Price should be close of it, previous candle structure here. So if market close of it, so we can plan for the buy to the upside right here. Again, market close of it, and now we can plan for the buy to the upside right here. And this will be our entry here, and this is our stop loss and target based on the Fibonacci tool, or also you can set based on the previous candle high low, right? So this is entry here, and if you are planning set the target based on Fibonacci tool, we can set the previous low is here and 1.618 is your target. You will get almost 5 RR, right? So in this case, this will be your entry here, and you can see here we can plan for the buy to the upside right here. And what happened after that? Market again taken out the inducement right here, and after taking out the inducement, if market broke it and close of it, so we can add one more position here for the buy to the upside. Let's see what happens next after this one. Market not close of it, just with the liquidity, price not close of it. If price candle close of it, so we can take a risk for the buy. For example, this candle close of it, so we can take risk here for the buy to the upside for the continuation pattern. And let's see what happens next after this one. And price going to be little bit downside and again downside. And what happened here? Market hit our stop loss is here, right? And after hit the stop loss, what will be a scenario for the next step here? Look at the candlestick formation here. Firstly, you need to check here that previous opening candle. Where is the previous opening candle? This is the previous opening candle is here. The last buying candle, and same what happened here, same output, market push downside. It means this act like a liquidity sweep here. Means the same buying and same selling. That means this entire zone create a strong shadow here, right? So this is a shadow formation here. It means this is an indication that market not able to push higher. This is a shadow of the 4-hour time frame candlestick here, because same momentum is a buying and same momentum selling here. So now what are you looking here? If market create like the structure, and one more thing is here, in a 4-hour time frame structure is a showing bearish. It means the higher time frame scenario is a bearish, and if market create here like any bearish reversal pattern, so we can take entry here for this sell. Why? Because market not able to push higher. Even market 2 times try to go higher but not able to push higher and create a liquidity sweep here, and so we can plan here for the sell. If market taken out the previous high, so we can take entry. Let's see what happens next after this one. And after that, we have to wait for it to taken out the inducement. So which point we decided that market looking for the sell here? Firstly, market should be close below it, mean the market properly create like this structure here, mean the create a shadow here, which one is here. So this is a shadow and this is the next candle open here. And if market create here any kind of like structure formation like this one, taking out the inducement, pullback, and we can sell here. Okay, so let's see what happens next after this one and how price is reacting after that one. Okay, price going downside and downside again. What happening here in this case? And after that, how price is reacting here? Look at this one. Market taking out the inducement, and after taking out the inducement, what are you looking here? After taking out the inducement, market should be pushed downside, and then we can plan for the downside right here. And if market push downside and create any kind of like structure here, so we can plan for the sell right here. This is our order flow, and if market have here, so we can take entry at this point right here. This is entry, stop loss, and target should be previous low, which one is here. Okay, so this is our entry and this is our stop loss and this is our target, which one is here. Inducement taken out, push downside, mitigation, and we can plan for the sell. And also, if you want to switch in another time frame like 2-minute and 5-minute time frame as per your plan, but I will suggest you start from 1-minute time frame, which is very aggressive. 1-minute and 2-minute time frame will give you immediate result for the buy and sell. So this is our first entry, and again what happened here? Market again taken out the inducement, push downside, and let's see what happened next after this one. Again market push downside, and this is our zone when we can plan for the sell right here. This is our entry, and this is our stop loss, and this is our target, which one is here. And also you can set based on Fibonacci tool 1.618 following the previous candle high or low, which one is here. So 1.618, which will be around here, we can set as a target right here. This one and this one as well as here. So the first entry is not mitigated here, so we can leave them and running the next candle. Let's see if this one is a mitigate or not mitigate. So this entry is a mitigate successfully, and let's run in a 5-minute time frame for the better understanding. And finally market pushing downside and downside. Again market taking out the inducement, push downside. This order flow is a mitigation here right here, so we can again planning here for the sell, push downside and looking for the sell, and finally market hit our take profit is here. So this exactly happen in a higher time frame to lower time frame, that how price is reacting. if higher time frame structure is a bearish and taking out the previous H4 candlestick high, so we can get aggressive entry for the sell. But if market create a bullish entry, so we can get entry, but the probability is here 50-50%. Like here we can see here, this time market give entry, but this entry is not going upside and market turn bullish to bearish, and this one is a hidden stop loss. Again, what happened here, market create one more opportunity here. If you're following the 5-minute time frame, so this entry will also execute here. This is our order flow, which one is here as per the 5-minute time frame. So this entry will be also mitigate here. This is entry, and next entry is here. So you can get these type of entry happen here because market following the higher time frame scenario. And same thing applicable here. Again, market taken out the investment. This is the order flow is here, push downside, break it, and we can again plan for the sell in a downside. So this process will be continue here in a bullish trend, in a bearish trend. I hope you learned that how you can identify high probability zone for the buy and sell, and what process you need to follow for the reversal and continuation. So this was process for the reversal pattern, and this was straight for the continuation pattern, because at this time market closed below it and market created one more bearish candlestick here. Let me show you exactly in a 4-hour time frame. We can see here this was a reversal entry here, and after that what happened here, this is a continuation, this is a continuation entries. So these are all continuation entry here because market falling downside right here. There is no reversal pattern from here. So I hope you learn a lot of things that how things actually working in a higher time frame to lower time frame, and same thing applicable on each and every point. Like this one, previous high sweep here, you will get entry here in a lower time frame, as well as here you can also get entry. Here you will get entry for the short term. Maybe you will get risk reward or like break even and maybe stop loss and maybe target. So the probability of the buy side in a bearish market is a 50-50%, but sell side become high probability compared to the buy side. On each and every video, you will learn a lot of things step by step. That's why I'm making a series by series a video. You will learn step by step process that how you can trade using CRT candle range theory. In upcoming videos, you will learn more better and better every day, where you can sharp your skill and improve your trading style. So thank you so much everyone to watching the entire video. I hope you learn a lot of things. If you are new, subscribe our YouTube channel and join our free Telegram channel. Link in description. Go and check out. And I will see you in the next chapter. Happy trading.